Yes.
Cool. Let's go ahead and get started. Greg, I'll wait for you to tell me that I'm live now. Hello, everyone, and welcome to the International Market Roundup with Metastock. My name is Hunter Smith. As you can see, I'm not in the studio today. We are practicing good self-distancing habits here at Metastock, and I am in my home office. So I'm glad you guys could join me. I hope you all are safe out there. Just to get kind of the legal stuff out of the way before we get started, this demonstration is designed to instruct you on using Metastock and accompanying software plugins, and it's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of our software, any trading strategies, or any information provided in connection with the company. So, got the legal stuff out of the way. It has been, I guess you could say, an interesting week in the market so far. We've seen a little bit of rebound here. We're going to get more into that here in just a minute. I'd like to introduce to you my special guest here today, Sagar Nandi. Sagar, can you hear me okay?
Yes, I can hear you, Hunter. Hi.
How are you today?
I'm doing good. Thank you. How are you doing?
I'm doing well. Thanks for asking. We're just
See, I can see the ocean from my room. Of course, it is nighttime here.
right.
It's 1 a.m. my time. But
Yeah,
it is hot and sunny and it's beautiful.
Oh, that's amazing. We're keeping you up late. I appreciate you spending a little bit of your night with us and to get us up and started. Well, like I said, it has been a very, very interesting week. So far, I'm just going to pull up a chart real quick in Metastock. Let's bump this over to the correct screen. We're just looking at the Dow. It's been an interesting week with the Dow, and I think that primarily the reason for our bounce has been the bill that just went through that gave us $2.2 trillion in funding that got pumped into the economy, various different ways from corporations to
Can see in real time exactly which industry the one and
let's do this.
but I want to screen.
I do, yes. Let me see here.
Are you
Perfect.
Are you seeing my website, sagarnandi.com?
I am, yes.
Okay, great. Let me show you something. This tool that I use, QEdge, it is based on Metastock Zenith. Because Metastock Zenith is real time, I have data not only for the USA market, for major global markets. I updated the data just now to save bandwidth, I have set streaming off, but I could set streaming on as well. What I can point is that today, not many sectors are up. In fact, only one sector is up and all the other 10 sectors are down. Whereas yesterday and over 2 days, last 2 days, you can see 11 sectors were up and no sector was down. So though the market gained heavily over last 2 days and even over last 5 days also, all the sectors were up, today it has pulled back. Now,
It's been very, very sideways. Now, I was looking at one of the other tools in Zenith. It's just a basic movers page, and it said that there were only like 14 new highs and 50 or so new lows in the market, which is significantly less action than is normally going is normally going on. So it feels like consolidation.
It is today. If we look at today's market, let's look at NASDAQ, for example, and I am opening it with the default template that I use weekly and daily. Interestingly, though there was a large drop in the weekly chart for NASDAQ ETF QQQ, it stopped right at the memory trend line support. Previous week, it held that support, and this week it is going up. Though the candle color in the weekly is still bearish, in the daily also, there was a trend line support and price bounced precisely up from there. So if somebody was looking to buy NASDAQ, thinking that it has dropped a lot from the peak, the right time to buy was right after this candle. Now it has gone up somewhat, however, the trend is still down. It has certainly lower high, lower low. So we don't expect any trend following trade to come right now. What may happen, and it will give a nice trading opportunity, price comes down a little bit, but not so much that it goes below the support trend line and then goes up from there. That will give a low risk trend following trade where one could enter somewhere here and put stop just below that low. We may watch for that. Now it has gone up somewhat, so I wouldn't suggest buying into QQQ. And QQQ was the strongest of the 4 market ETFs. If I look at DIA, you can see there is no trend line support for the weekly chart. So even if it goes up, we don't have a basis to consider a long trade. And similar situation will be true for SPY, the S&P 500 ETF. There is no trend line support. However, here in this case, there is a pivot support in the weekly chart. That is at the price level of say 234 around here. So if somebody used that pivot support to take the long trade, that would be on this day. After that, price has gone up. Now it is a bit late to take a long trade based on the bounce from this pivot support. Here also, if price comes down a little bit and then goes up again, that will give a nice trend following low risk long entry opportunity.
Now, with with your system, there are a lot of technicals that go into it. Have you found that based off of the trend line that you were just showing, have you found that technical analysis is still really held up and been the best way to go in this current market?
True. Now, I will be careful about saying the best way. There are many traders who look at technicals, and one thing you said is absolutely right, that the technical analysis hasn't changed over the last 50 years, 100 years. So the trend lines are as effective as 100 years ago. The pivot levels are as effective as 100 years ago. and I rely on them. At the same time, I look at the sector industry rotation also. So right now, today, for example, and today is Friday, so it is going to be the end of the week. If I look for the 5 days period, what are the strongest sector? Or if I look at even today, what are the strongest sectors? The top 3 sectors today, and this is using real-time data. Let me switch streaming on also. The strongest 3 sectors are utilities, consumer staples, and real estate today. They are not non-defensive. They are all in defensive areas. That doesn't show the bullishness of the market today. So that is a warning sign that market is recovering, but it is not so bullish. Now, if I go to the industry tab and look at the best performing industries, those will be in cyan color. Let's look at top 10. Their residential rates, the top one, distillers and vintners, alcoholic beverages, industrial rates, paper products, rates here again, breweries, and distillers, vintners are related, utilities, electric utility, multi-utility. So other than consumer electronics, all the other sectors are not defensive really. They are not defensive areas. So both at the sector level as well as the industry level, I see that defensive areas are doing better. That is not a bullish market. That I keep in mind when I look at charts. Now, if you want to look at the semiconductor stocks, for example, let's see, usually a bullish market is good for semiconductors. So if I go to sectors, let's start with information technology. And from the color coding, you can see today's performance is not cyan. So it's not the strongest, but let's drill down into the information technology industries. And these are all infotech industries. Let's look at semiconductors, these two. They are not strong today. So they are supposed to lead the market higher. At least that has been true in last 1 year plus, but they are not strong today. If I want to drill down into the semiconductors and semiconductor equipment stocks, these are all the stocks, and you can see many of them are down today. Many of them. So this is not telling about the strength of the market. Coming back to the spider chart, SPY chart, though it has recovered somewhat, looking at the sectors and industries and the fact that defensive areas are doing better, I will not suggest jumping into many stocks right now.
Yeah, it's a little bit. I mean, it has a lot of people gun shy. You know, I've read quite a few different things saying, well, you know, it's the best time to buy. I agree that we're at, you know, historic lows. This period of time is going to be one of, you know, the best, if not the best time to really start investing strongly. See how much of that was really false inflation based off of just hype and emotion based off of this stimulus bill that's coming through.
That is an important thing to ask before jumping into stocks hunter. Now, if we look at this rally from the bottom, which stocks went up? Let's have a look. If I go to QH again, and let's see, I'm refreshing the data. Let's see over last 2 days, that is not including today. Today is 0 day in real time. Last 2 days, these are the stocks that went up most. Some of them went up 171%, 138, 124, 122. Huge percentages over 2 days prior to today. Now, let me close Metastock and close the existing chart, and let's have a look at those stocks. Firstly, I can see this stock is in REITs. It's a real estate investment trust. Let's look at the chart. Let's go back to Metastock, make sure it is on Power Console, chart option. And if we have look at some of, okay, I know why it's not opening, because I should set the trading system to Q Global. That was my mistake. Rally was not driven by what you will say strong stocks. This is the second one, went up by 100+%, not looking like a strong stock, not like an Apple, Amazon, Adobe, Facebook, Netflix. Let's look at, let me be bold enough to open 3 at the same time. My system should still not crash. Yes, it didn't crash, and you can see this is not a strong stock. Looking at this weekly chart, looking at this daily chart, nobody will say this is a stock they are jumping to buy today. Same for the other one, RC. And let's look at the next one.
Trending up, and then suddenly we introduce all this volatility.
True.
You know,
the sharp drop.
Right, and the concern there is that yes, it's definitely undervalued, but it was affected so heavily by this emotional market drop. You know, I have kind of little faith that something like this is going to actually recoup and hold resistance lines and support lines rather moving forward.
True. And that says that most likely these rallies were driven by short covering. Now, one thing you mentioned, Hunter, that these are probably undervalued. Now, in my system, I look at the stock's valuation here, and that is not based on price movement. And you can see PMT, RC, AKRX, their valuation, the first column is in yellow color. So they are not undervalued. If I wanted to look at the undervalued stocks that went up strongly over last 2 days, I can use the smart filter. And now you can see there are several undervalued stocks also. Why they went up? One explanation I have in my mind is the short squeeze column. This is showing that there was a short squeeze potential, meaning the short interest was very high. So some people might have covered, and that led to others covering. And the furious rally in these stocks, in my view, is because of short covering over last few days that gave rise to this huge rally in stocks that were down much more. So they might have rallied by 100%, but they are still down maybe 70, 80% from a peak that formed only 1 month or 1.5 months ago. That is not a strong stock. How a strong stock will look on charts? Let me try to find one. Adobe. A strong stock should drop less than the market drop, and it should hold some kind of support either in the daily preferably, but that may be unlikely now, at least in the weekly chart.
Yeah, and
And
you say a
this
strong
is a good
stock, and
example of that. Adobe.
yeah, and what you mean by a strong stock is something that is not necessarily as moved by the emotional trades that are happening right now, correct?
That is right. In other words, we can say it is also dropping in the daily chart. We can see it has dropped. But if we look at the weekly chart, we can see it is still having higher high and higher low, the traditional definition of uptrend. So it is still in an uptrend in the weekly chart. And it has also come to the trend line support, the cyan color line, and it has stopped there. If the market goes up, I will like to buy this stock, putting stop just below the recent low, instead of trying to buy the stocks that we were looking at just now, which are far, far below their recent 1 month high, last 1 month high. They have dropped a lot. They are weak stocks, and this is a strong stock. If I look at a pharmaceutical stock, I was looking at it earlier, that is AbbVie. AP, AP, what is AbbVie? ABBVI. In Metastock, I can search by name also, ABBV. You will see this is another stock that is holding the support very nicely. It came back to the support that is coming from very far away. Those tend to be robust support. So this is a stock. If it goes up from here and it is bouncing from the daily support, that is a strong stock, not the stocks that went up sharply over the last 2 days. So get really, again, if I look at SPY, it was not driven by the stocks that are strong. And I apparently cannot type because my filter was based on name. I have to choose symbol, and now you can see now Adobe ADBE and FV ABBV both are much stronger than S&P 500. Those are the stocks one may focus on buying, not the stocks that has dropped much more than S&P 500. By doing that, you are buying stocks that are outperforming the market, not underperforming the market.
And that's a crucial point, because we've been kind of driving home lately in our recaps and our webinars, et cetera, that it's a really, really good time to trade. That doesn't mean just go out and start buying, everything that's dropped 40%. This is a time for it's a great opportunity to really take advantage of the current climate. However, you have to do it in a smart way. The knee-jerk reaction is to start going through and finding all the stocks that have lost the most by this COVID drop. And I don't think that that's the best. I mean, it was even my knee-jerk reaction to say, oh, well, this has lost 60% of its value. It's way on sale. I should buy a bunch of this and it'll return. But the smartest way to do this is to, like Sagar is saying, is to find these stocks like Adobe, as well as the, what was it, ABBV?
ABBV. And there are many such strong stocks. I can guarantee any trader the best way to make money in the stock is to buy the strongest stocks. If you are going to go far away by car and you have a choice of buying a or driving a very maybe not so strong car, and then you have a choice to drive a Ford, maybe Ford what? Ford Ranger. I think Ford Ranger will do better than a small 800cc car. In trading, if you want to make money, buy the strongest ones, but buy them at a low risk point. If you try to find stocks that has dropped the most and buy them, that is a sure way to lose money in the long run. A few times you may be lucky, but like in every other areas of life, you win by choosing the strongest candidates, not the weakest candidates.
Yeah, and I couldn't agree more. The reason that they are affected so heavily by this emotional trading right now is due to the fact that they are not strong stocks to begin with. Maybe they were posting decent growth over time, but again, like you're saying, Sagar, you might get lucky with a stock or two and make a bit of money, but long term it's just not the way to do it. What you really want to focus on at this time are the strong stocks that maybe are not going to be 50-60% discounted, but maybe you're getting them for 10, 15, 20% less than they were before.
Yes, and they are not discounted reason. The reason they know those stocks are not to be sold at discount. Now, other thing is market is dynamic. The stocks that are not doing well, we saw some of them dropped a lot, recovered, but still far below their recent high. It doesn't mean they will remain weak all the time. In future, they may become strong, and we will find that out from their charts. We'll find that out from their fundamentals, and we'll be happy to buy them again. It's not that ABBV and ADBE will be the only strongest stocks. These stocks go in cycles, and the weak fundamental stock in a weak industry may turn around, and the industry may become stronger, and the stock may be stronger again. Now, I want to reinforce the statement that you made, Hunter, that it's not a good idea to buy weak stuff. Let's look at US oil.
That's good. I was actually going to bring up oil. So
Now,
I'm
this is the
curious about oil
this is the
right now.
weekly daily, but let me plot it using a line chart, and Metastock allows me to put all the ready templates at the top menu bar. I have done that, and this is daily, and I'm going to use the hotkey to look at a weekly chart. Let me delete this trend line. Now see the drop in oil. It used to be here. This is the oil ETF USO around 40, and that time was, let's see what time it was. It was in 2014. Then price dropped a lot. If you thought that, okay, it has dropped enough, it's a huge sell buy, you would be disappointed. It dropped again. Then it moved sideways for a while, and see the sharp drop in recent periods. This reinforces the thought that I shared just a while ago, that you may not want to buy things that are weak. Instead, when it started to drop here again, broke below these watermark pivot levels, you could short it if you are willing to short. This is not the only commodity. Let's look at natural gas. The ETF is UNG. Same pattern. It has dropped a lot. Every time people talk about it going sideways and then starting to go up, it drops again. I think I was looking at the future symbol, US oil. I mean, the oil futures may be down today. Let me check. USO is down by almost 7% today. Now, I would also like to show the chart of ExxonMobil. It's a blue chip company and one of the strongest companies. It had been so in the past. Remember, I showed the peak of USO sometime in 2014. It dropped, but it was holding on to this range for quite long time, and now See the drop. It has dropped even sharply, more sharply than oil itself. So when one of the strongest stocks in the industry drops so much, that is a proof that don't buy weak things. And contrast that with gold.
Oh, you're reading my mind today. I was going
Prices. Oil is at a huge discount, and gold, you may say, overpriced, at least. If you think of that way, that, okay, earlier it was at a lower price, now it has gone up, it is overpriced, and you bought USO, I bought gold, I think I am doing better now, isn't it?
Yeah, you know, and this is something we talked about, I believe it was 2 weeks ago on our last international market recap, was gold and the strength that is in gold, especially when we look at periods where we've had great loss within the markets, the housing crisis in '08, 87, you know, we look at those, and gold does crash as well a little bit, but it's also kind of, it can be treated as a leading indicator for the rest of the market. You know, and if the technicals are lining up here, it is a strong thing to buy right now. And, you know, I think it's going to be one of the first things that really starts recouping over the rest of the market.
Now, one thing I will also mention that I try to buy low points. So I look for things that are going up. So this is a weekly chart, not a daily chart, but in the weekly chart, when it went up, came down and starting to go up again, that would be my buying point, not here. Or you can say if it dropped a little bit, but not so much as to turn the uptrend into downtrend, because it was still having higher high, higher low, and made a local low and started to go up. That would be my buying. Follow that, what you are also doing, you are allowing yourself to put your stop that is not very far. So if your entry price is here, your stop is here, you could try to book profit as soon as the risk distance is covered, or you could use kind of trailing stop. If you do that, if you find stocks that are already in an uptrend, pulling back to a support, but the uptrend is intact and going up again, those will give the best trading opportunities. I'm not saying gold is strong, therefore buy the peak. No, I'm saying if gold is strong, wait for it to pull back and then buy. And if we are trading short term, try to book profit at a point where you have reward risk ratio at least one or more.
Now, one of the questions that came in from YouTube, let's see, Greg asks, how are you defining weak and strong stocks? It's a good question. I think that kind of touched on it a little bit as far as overall trend. Sagar, how would you answer that question?
I will give a longer answer than the person asked. I look at the trading as a holistic way. I look at strong stocks both in terms of fundamentals and technicals, but I simplified it. So if I look at any stock, and here I have the symbol for HPQ, and I'm using a tool called Q Vital, I am answering the question, but I am also answering it with a live demonstration. I am now trying to find out, is HPQ fundamentally strong? And how can I find it? I can only find it in relation to the stocks in its industry group. So here the peer relationship I have chosen same or similar industry. I could choose sector, country, or even global, but usually for USA market, which is big enough, this is the right choice, same or similar industries. There are few points that will show that HPQ is a strong stock. One is EPS, earnings per share, is positive, meaning it is making money. It is not hypothetical. It is not projection. Currently, they are making money. Second thing, some people buy for dividend yield. This has not very high dividend yield like 20-25%, but 20-25% dividend yields may not be sustainable. It has a decent dividend yield of 3.9% now. And it is taking a while to retrieve the peer stocks. That is fine. Okay, it has just retrieved it. I never like to store any data. So this tool is sending request to Metastock Zenith. It retrieved all the peer stocks, 22 peer stocks, and then it calculated vital statistics. I will point out few things other than the earnings per share, other than dividend yield. This tool I am using, it has certain scores, and the valuation score in cyan color saying that it is undervalued. And these undervalued characteristics is not based on its price move, because some stocks may be at a high price point, even near 52-week high, but they may still be undervalued because their fundamental performance, earnings growth, etc., is very robust. So here I am not looking at price performance, I'm looking at fundamental valuation in relation to the peer stocks. I cannot compare HPQ with ExxonMobil, which are in different industries. So it is showing currently the valuation is great, undervalued. Earnings quality is also good. And then I am looking at the earnings growth for the last 3 quarterly periods and then last 3 yearly periods. And you can see all of them are positive. So this stock is strong fundamentally, not only in terms of valuation, not only in terms of earnings quality, but also in terms of earnings growth. And it pays a decent dividend also. So I have simplified fundamental analysis as per these few characteristics. Primarily, I look at these 2 dimensions, either valuation or earnings growth, or maybe both if I am lucky, like in this case. And some people buy based on dividend, but that is not my primary criteria in my personal trading. So this is fundamental strength, but I don't buy stocks just based on fundamental strength, because if the stock goes down, I still lose money. I have to make money only if the stock goes up. So let me open HPQ with my go-to template, weekly, daily, and let's see on the technical charts, how is it looking? And we saw some stocks that went up a lot, but still down a lot. And contrast that again with HPQ. It came to a very nice trend line support. The support held 1 week ago, and now this week it went up significantly. And we saw fundamentally it is great in terms of valuation, reasonably good, quite good, you can say. Earnings growth is positive, quarterly period in terms of fundamentals. So this is a stock I could buy right when it was bouncing up from the weekly memory support, which was around, let's say, this level 13.5 in the weekly chart. So in the daily chart, it would be at this price level, meaning see the series of red candles, red in my system, red and magenta are bearish. After that, you had a yellow neutral color candle. You could buy right on that day. Maybe if you're using daily charts, you could buy at the close of the day. If you did that, you would put stop just below the recent low. And from there, price went up enough to cover more than the risk distance. So I always keep that in mind. If I am taking $1 risk when I am gaining $1 or more, I think I can book profit for short-term trading. you short, you may make money from shorting in a bearish market, but don't buy. That is at the market level. It influences the stocks, but market level is very broad. To be more accurate, you look at the sector level, see which sectors are going up. But there are only 11 sectors. Sector level is also too broad. I'll come back to this statement a few minutes later. The right way is to look at the industry level, because regulations, taxation, etc., demand, supply, they impact the stocks at the industry level much more concentrated way. So I am looking at fundamentals, strong stock, either in terms of valuation or growth. I'm looking at technicals. They should give me a low risk entry point in an uptrend or at a support level. And I'm combining that with the industry strength. So I looked at HPQ. From here, I could click the cog to look up its industry, that is technology, hardware, storage, and peripherals. And I can see today it is down a bit. The market is also down, but over last few days, it was starting to improve. You can see the color changing. And if I wanted to look at the actual percentages, you can see over 1 month, this industry is down a lot, like many other things. But over 10 days, the industry is up by 8%. 5 days, 17%. Yesterday, it was up by 10%. So up till yesterday, and if I look at the chart, the actual buying opportunity came when? On this candle. That was 19th March. So on 19th March, if you looked at the industry strength, that would be in this period, the industry was starting to go up. That is how you can find a strong fundamental stock with a strong technical setup where the industry is also strong, and then buy it more confidently. I think
And
that was
it really comes down to that deeper analysis. It's not as easy as just putting a 200 period moving average on a chart all the time. And that's why, you know, looking into the fundamentals, doing some sector analysis is really going to pay off to find, you know, these strong stocks. And I've really enjoyed that you do that.
true. You know, there are many people, Hunter, who look at only technical analysis, and some of them may be making good money. Now, I have this thought. I have this very powerful feature in MetaStock, and it is extremely useful. I have number of scans, and I can run the scans on thousands of stocks, and I can find many technical setups. In a day, I may find 10, sometimes 20, either long or short. Now, if I am finding 10 technical setups in 10 different stocks, this is my thought. Why don't I spend 5 more minutes to find out of those 10 stocks which are fundamentally strong? Because I am not able to buy all the 10 stocks every day. I may find out of those 10, 2 are fundamentally strong. Then I may look at industry. I may find only one of them is in a strong industry. Why don't I buy only that one? And if you think about that, all we traders try to do is align more and more factors in favor of our trade. A technical analyst also does that. I also do that in terms of technical charts. But I have the tools because of MetaStock, Zenith, and the Q systems to spend 5 more minutes to shortlist even better candidates.
Yeah, and it's totally worth it because you know, when you're just looking at, you know, let's say 10 different instruments that you could trade, 10 different trading opportunities. Our job as technical analysts is to find some sort of you know, math within the chaos, I guess you could say, is to line up as many you know, different clues as possible, because ultimately
Yes.
it's not in our hands, but what we want to do is we want to take as many factors and line them up as possible so that we have as many, you know, cards in our favor as possible.
Yes, why not? Why not? Market is competitive. If we have the means to do that, why not?
Now, we're going to move into a little bit of a speed round here, Sagar. We're going to give you a couple of different symbols. Those of you in the audience right now, those of you on YouTube, feel free to type in the chat, different symbols you might want to look at. I have a couple to start us off. And Sagar will, since we call this a speed round, we're going to give each stock a little bit under a minute to identify whether or not it would be a potential buy or short, what you think about it.
Okay.
We're going to start off with Activision, which is ATVI.O.
ATVI. Give me just 2 minutes before I go into ATVI. What I'm going to do in terms of technicals, I have very clearly defined trade setups for box, bounce, headwind, and go with flow. I'll not go into the detail of that. The detail are available on my website. But why I mentioned that, when I say about Activision Blizzard or any other stock, I am going to buy or not, that is based on the trade setups that I use. And why looking at the chart, I also ran my fundamental analysis tool, and let me open the chart in parallel. Hunter gave me only 1 minute or so, so I'm trying to multitask. Now, when I'm
Put you to the
looking
test
at the charts, I'm applying the checklists I have, unambiguous checklist. And one reason I have not to buy the stock, I stop. I don't find 10 reasons not to buy the stock. Here in the daily chart on the right hand side, one reason I immediately have not to buy the stock is that there is a memory resistance, that is the resistance trend line. If there is a resistance just at the current price level, that is enough reason for me not to buy. Now, there may be many other reasons not to buy. There may be fundamental reasons, but I don't want to spend more time. So I saved Hunter's time. I gained some time, I think, Hunter, on this stock. I may be allowed to take some more time on other stock. Why I don't suggest buying Activision Blizzard right now? Because it has trendline resistance. If it can clear that, I will not suggest buying at a breakout point because the stop loss will be far away. The ideal approach, in my view, will be if it breaks out, pulls down a little bit and goes up again, giving a proper trend following, what I call go with flow trade setup. That is my answer on ATVI. I don't need to look at fundamentals because technical itself is saying me not to buy because of resistance.
Perfect. Next one is going to be Copart, which is CPRT.O.
Why don't I in parallel run it? And you can see Activision Blizzard was not fundamentally strong also, but I didn't need to go to that CPRT.O. And I come back to the chart and open the stock. This is looking much better, relatively speaking. Why? Because in the daily chart, sorry, not daily, on the weekly chart, the left-hand side is weekly, it fell hard, but it is holding a long-term trend line support. That means in the weekly, it is still having higher high, higher low. It is in an uptrend. This week's candle color changed to neutral, though the shape is indecisive. In the daily, it dropped a lot. That's fine. Many stocks dropped. It didn't touch the trend line support in daily also. In weekly also, it didn't touch. I would be happier if it touched and went up, and the right point to buy would be at that time. Now it has gone up somewhat. Interestingly, it is gone up, but it is still in a downtrend. So how will I like to look at this? I will prefer that it comes down a little bit. The daily candle color is remaining green, bullish. Let it come down a little bit and go up again. That will give me a low risk buy point, not now. and then go up. So if it is going to the trend line support, reversing from there, that will be a bounce from trend line support. If it comes down little bit from here, but not all the way to the trend and goes up again, then it will be a trend following long trend. So this is looking better, I said, than ATVI because there is no resistance trend line nearby. So if it can go up, it can go up far enough to give me a profitable trend. Let's have a look at fundamentals then, because technically it's maybe giving a setup, not today, but soon. Now let's look at the fundamentals. As I said, fundamentally, I am looking for either valuation or growth. Sometime I may be lucky, like in HBQ. Here, the valuation is not great. That's fine because earnings growth, both for the last 3 quarterly periods and look at the last 3 yearly periods. Great. These are compound aggregate growth rates for the yearly periods and also the earnings growth over the last 3 quarterly periods. Great. And revenue is also very good. It makes money. So fundamentally also, it is stronger than ATVI. Of course, they are in different industries. Technically also, it is looking stronger. If we did all that work, let's look up the industry, diversified support services. Just one click away. And everything is happening in real time. That's why I love Metastocks. Now, here on the industry tab, it is showing relative performance, and it is not the best performing industry. If you look at the pace column, it is showing it is starting to accelerate. If we look at the percentage column, today everything is down. So this industry is also down. Not everything, but exactly what is down, I can also point that out. Today, 19 industries are up, 129 down. So most of the things are down. This is also down. But if you look at last couple of days, yesterday, last 2 days, last 5 days, it was starting to go up. So I'll be happy if it goes down a little bit and bounces from the trend line support. Will not buy it now.
Wonderful. Last one. This is all we have time for, unfortunately. Last one is going to be Home Depot, just HD.
HD, okay.
Now, this one is kind of interesting for me, just due to the fact of the most recent movement. It's been very, very similar to a lot of other stocks. It's taken a hit the last couple of weeks. We had a really large gap up a few days ago. So I'm curious to see what you think about Home Depot.
Home Depot. Let's look at the weekly chart first. It displayed a headwind reversal signal at this point from where price went up significantly. Then with the whole market, it dropped sharply, but came to this watermark pivot and then breached that pivot, but recovered. And the pivot was at, let's say, 160. So the right time to buy this stock would be when it went below it and then recovered at 160. So we could give a stop buy point. And let's look at the daily then. On this candle, the close was 162 on this yellow candle. On this yellow candle, the close was also 161. Why I looked at the yellow candles? Because in my technique, if the candle color is red, it is bearish. So I'm not going to buy. This yellow candle, few things happened. First, the candle shape was bullish. Price closed here, which means it closed above the weekly watermark pivot. That was the right point to buy it using a setup I call box setup. That is trying to catch a stock at double bottom. So we could buy it on this yellow candle or after 2 days, this point. This would be our entry. Stop would be just below the recent low. By yesterday, we covered more than the risk distance. So I would close the trade, swing trade, short-term trade. Now, when I bought it, technicals look good, and I'm applying the unambiguous checklist for the box setup. Let's look at the fundamentals. Here also, you can see valuation was not great, but earnings growth was positive for the quarterly periods as well as the yearly periods. That gives me a reason to buy the stock. And if I look at the industry, home improvement retail, let's look at the industry percentage. Over 1 month, it is down a lot. Over 10 days, also down a lot. But over 5 days, it went up strongly. And remember, that was the time in last 5 days that it gave me a trade setup. So this stock was going up along with the industry, or rather the industry was going up and the stock was also part of it. That would be the point to buy it. Not now, because now the stop loss is far away. One thing I try not to do is chase a stock. If I have a mechanism to buy it at a lower price, why buy now? Now I see fundamentals okay in terms of earnings growth. Now if I am tracking the stock, I will wait for it to pull back a little bit, but not take out the last low, give me a higher low and go up. That will give me a trend following trade setup. What I could take earlier, that was a sideways market, double bottom trade setup, and next trade will be trend following trade setup. That is my view on Home Depot. By the way, when I looked at Home Depot, one thing I always do, and if I have few more seconds, see, I carried out the peer analysis and there are few more stocks. Before buying, why don't we look at those few stocks? I can see today everything is down. 4 out of 4 stocks are down, but over last 1 day, actually yesterday, and over last 2 days also, the FND and low were also up. So let me open both of them, close the chart. Right, let me open both of them and okay, not here because I'm not trying to run the scan. I'm going to go to the chart option in Power Console and click the chart icon again. And sometimes you may start with a stock in mind, but end up buying another stock based on this peer analysis. Here I see for low, it didn't come to any support before going up. So I would not consider this as a better buying opportunity. This one was also okay because this is FND. It also came to a very long-term support and went up. And when it went up, it displayed some kind of bullish pressure. The candle color changed from red to yellow. The right point to enter the long would be this candle where the candle color was yellow and the shape was also bullish. Entry would be at this point. Stop would be just below recent low. So far it is going up. But looking at both of these charts, I would prefer Home Depot because Home Depot actually touched the support and went up from there. Whereas FND didn't, and FND may have to touch the support again. So I would have selected Home Depot after doing this complete analysis.
Wonderful. Well, on that note, we are going to go ahead and wrap up for today's market roundup. Sagar, thank you so much for doing some analysis for us and showing us around some of the tools that you use and the process that you go through. I hope you're staying safe over there in Thailand.
You too. Thank you so much again, and thanks to everybody for joining today's session. Have a great day.
Also, before we leave here, Sagar, what is the best way that people can get a hold of you if they have questions?
The easiest way is to drop me an email, and let me type my email ID. Trying to get a sticky note up. You may write to me tradingprofitably@gmail.com or info at my name sagarnandi.com. Either one will do.
I will go ahead and put those in the chat right now. So if you guys have questions, feel free to send Sagar a email. Thanks again, Sagar. I appreciate it. Everyone out there in the audience, thanks for joining us today. We really appreciate it. if you haven't subscribed yet to the channel, definitely subscribe, leave a like, leave a comment, tell us how you're trading, and how you're liking these little sessions that we do every week. So until then, everyone stay safe out there, practice that social distancing, be careful with your trades, and as always, happy trading.
Happy trading. Bye bye.